Hello everyone and welcome to today's major markets update. Triangles, 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 and a new daily format for Mondays and Wednesdays. I will do more simple if-then scenarios for the short term and provide a important stock chart like the Apples, the Microsofts, and the Teslas and go over those. It's just an added flavor. And then on Fridays, we can review the bigger picture. Okay, so Mondays and Wednesdays will be reserved for the shorter term, with of course an occasional zoom out, and then Fridays more for the bigger picture. Okay, so really focus more on the price data, and for now also add a important stock that a lot of people of course like. I will start with Tesla, since of course Elon Musk is a lot in the news these days, so let's have a look at that one. For now, let's have a look also at some trading rules. This is going to be added to the slide deck every single time. Jesse Livermore's trading rules. These are golden. Please print them out, hanging above your bed, put them in your pocket, in your wallet, whatever you want to do. Jesse Livermore was, of course, is a very famous trader, and I can highly recommend you sticking to these rules and at least read them. Because, for example, markets are never wrong, your opinion is. And as I always say, big gains come from big time frames and small gains come from small time frames. So for example, big movements take time to develop. It really takes a long time. That's why I continue saying zoom out. Okay, zoom out. But I know every time frame is important, but the bigger picture is much more important than the smaller, because the small needs to fit into the big one. So please read those. They'll be coming along with every single slide deck. So just gentle reminders. They're golden. They're golden nuggets. They're great. So starting off with the Dow Jones, the hourly chart here, and it looks like a triangle is forming. And very simply put, if we close below 32,600, this will target about 31,900 to 31,600. That's the red arrow. Very simple. Okay, this looks like a triangle here in purple. Then if the triangle completes, we can still look at A, B, C, D, for example. Triangles are notoriously complex. The price action, of course, over the last 2 weeks has been notoriously complex. One could say maybe a bull flag is forming, fine with me, but above 33,215 can target 33,760, 34,40. Okay, can. Never a guarantee, can. I really like to see a final fifth wave high. It would look much, much better on the chart, but it doesn't have to. We technically have enough scribbles in place, so that's why we have the if-then scenarios. Break lower, then we had 5 up already, and we're going to go to the 50 to 62% retrace. Break higher, and here are 3 colored arrows. The green one is a simple symmetry based on the box price has been in. The purple one is the max width of the triangle, and the gray one is a 5:1 relationship from 100% extension. Okay, so all of them, as you can see, cluster nicely in the ideal wave 5 target zone, because we haven't really reached the ideal wave 5 target zone. We've reached the ideal 5 of 3 target zone. We've reached the ideal 4 target zone, but we haven't reached the ideal 5 of 5 target zone. So that begs the question, can we still reach it? Well, we will if we get the breakout. Very simple if-then scenarios. This is the beauty of Elliott Wave. Cannot go any better than this. But again, no guarantees, so always have appropriate stops in place and trade position size accordingly. NASDAQ100, same here. We've been stuck in this blue box for what seems now an eternity. Remember, markets can go sideways for quite some time. Also here, we can have technically enough waves in place with the top here in June 2nd, and now potentially overlappingly moving lower. Well, below 12,390 targets 12,000. Simple symmetry, because the width of the blue box targets the 62% retrace. And if we break out, then we have simple symmetry at around 13,300, and we need to close above 12,810, I believe it is. Sorry, I need to get my numbers straight here. I have a 1 0 too many, not 128,000, but something like that. There, okie dokie. All right, very simple. So we're either going to follow the red path or we're going to follow the green path. Don't know yet, because we're stuck in the sideways price action. And sideways price action is simply very hard to interpret from an Elliott Wave perspective. So we simply do if-then scenarios based on other factors. Now we're going to zoom out a little bit. NYA. The NYA topped at the 138.2% extension, dropped to the 76.4% extension, and should ideally from there rally to the 176.4% extension. Zooming in, trying to track a impulse higher with the Fibonacci levels. It looks like we completed 3 of 3, and we're now potentially working on a ending diagonal 5 of 3. Haven't really reached yet the ideal wave 5 of 3 target zone, which is here in gray. So that would be around 16,100. Then a drop and then a rally. Something like that would be ideal. We'll track it nicely. Still looks pretty good from an impulse perspective with a ending diagonal wave 5 of 3. Semiconductors drop below the bullish cutoff level, is in the ideal target zone. Looks still corrective, looks impulsive to the upside, and now corrective to the downside. So this one is, in my humble opinion, already in wave 2/B. We've reached the 38.2% retrace. So already done 3 waves lower. So technically the correction can be considered complete, but it looks like we might want to target a little bit lower into this ideal green wave 2 target zone. Okay, so we had the bullish cutoff, we reached it, we went lower, but I do prefer to see a little bit lower. Okay, very simply put, after 3 waves lower, do expect at the minimum 3 waves higher, because this can morph into a flat, for example, and not a simple zigzag or complex double zigzag correction, which I think it looks better this way. Regardless, you can see the semiconductors are in a different wave count than, for example, the Nasdaq and the Dow Jones. Here we have the S&P 500, also here. Looks like a possible triangular 4th wave could be formed. Okay, 4th waves, and especially triangles, are notoriously tricky and hard to trade. It can be complete, or it can tag on another corrective leg lower. Impossible to know just yet. I wrote this when we were right here at the top, so now we have this leg lower already. So we simply make nice, easy if-then scenarios. Below around 4,100, which is the trend line, can target 4,045. There, 1.5 too many. And below that targets 3950 to 3900. That's the red arrows. Okay, very simple. Then that is already wave 2B. If we go above 4150, we can target 4175 to 4225, which is the 76.4% extension and the red downtrend line. Above the red downtrend line targets 4325, 4350. Okay, very simple. So we'll let the market decide. Probably nothing will be decided until Friday, I would say, but maybe on Thursday, tomorrow, we can already see some price action. Okay, so these 4th waves are notoriously tricky and hard to trade. So we'll leave it as this. So I have established simple if-then scenario. They're very easy for trading. Again, nowhere ever said there will be a guarantee with a breakout. We can always have false breakouts and false breakdowns, but you got to trigger or trade the setup, right? That's what we're doing. So that's where we have these levels to watch, breakout levels versus breakdown levels, and where we can then expect price to go. IWM. This is the IWM chart I had on Wednesday, and we did bottom here right on the top of this C target zone, but I have to adapt the wave count, as it looks like we have instead a ending diagonal wave 5 of 3 on our hands. And this again shows you the variability of the short-term price data. So let me go about and change some of the price action. We had already technically done enough, but it looks like we have a nice subdividing there, ending diagonal on our hands there. And diagonals are always a little bit tricky. So this could even be 3 here. And then this would be, that's 2. And then this is A, I would say. So diagonals are quite tricky, can be considered complete, can still move a little bit higher. We've reached 138.2% extension of wave 1. So that is pretty good there. Something like this. And it's all ABCs, so that fits the ending diagonal pattern. And then this is the wave 1 of 1 here. So again, we had technically done enough to consider wave 3 completed, but we didn't break down sufficient. So then the market can always decide to subdivide higher, and in this case, potentially morph it into a ending diagonal. I like the path, and we can still try to move higher. It doesn't have to necessarily, we can already have completed the diagonal, because diagonals are quite unreliable. So now we have reached already the ideal wave 3 target zone right there. If we move higher, if we break higher, then we're going to go here. Okay, very simple. And if we're going to break lower, we should target something like this. Very simple. This is the breakout target. Let's put that one in green because that's good. And this is the breakdown target, potentially as low as here. There. Oh, didn't save it. Thanks, stock chart. All the work for nothing. It's unbelievable. It's unbelievable. Why do I even subscribe? All right, I'll change it accordingly. But you saw me at work and you saw how that changes things on the breakout and the breakdown. It will be sent to you in the slides. So that is that one. So also looks good with this subdividing ending diagonal wave 5 of 3. And then we move on to Tesla. Tesla is a name that, of course, many people follow. And it looks like Tesla is in primary 4, assuming this year will close red. If it does, then I'll label it as a primary 4. These are yearly candles. And then there's a primary 5 left. Alternatively, this is only major 3 of primary 3 to be determined. So then on the shorter term chart, we could have completed all of this primary 4 at the low in May. It looks like we did 5 waves higher, and we've now bottomed in the ideal wave 2/B target zone. And if we can break higher above the recent high, then we can target here. I hope stock charts saves this. And then we have to see if we can get something like this. I don't know yet if it's going to be 4 waves, 3 waves higher, sorry, or 5. I prefer the 5, but we don't know just yet. So it could always, of course, that doesn't get saved, but this is then the preferred path with, of course, a question mark for these ones. Okay, I'm just going to put question marks here, and hopefully it gets doesn't get saved either. Thank you very much. Now you see how my work is sometimes. Anyway, so that is what I'm tracking with Tesla. We do need to see, of course, a breakout. If we see the breakout, then we can nicely start tracking a impulse pattern. Alternatively, this is then only A, B, C higher of a corrective price action, and we're going to go lower once again. But so far, we've done enough of a price damage and a corrective pattern to consider a primary 4 wave completed. And as you can see, this is going to take time because this should then only complete major 1. Okay, and then we get major 2, and then we get major 3. And by the time I believe major 2 is completed, we could already be somewhere in September, October of this year. So then there's no time anymore for a rally to new all-time highs this year. But again, so this is what I'm tracking for Tesla. Looks good. We have potentially done enough. If not, then the May low was only a wave A. Then we get a wave B, and we're going to go lower one more time, potentially into the 400s. But for now, my preferred path is the 1, 2, 3, 4, 5, but I will track it diligently and keep you updated on this as well. All right, so thank you so much for listening. I hope you like the new format, a little shorter, to the point on Mondays and Wednesdays, and on Friday we can go over sentiment, market breadth, and all those things, have a little bit of a bigger picture perspective. Take care, trade safe, and I'll see you all on Friday. Bye.